But markets are still digesting the U.S. Supreme Court's ruling that struck down most of President Trump's tariffs. Now, let's get straight to some analysis on this. And I'm going to bring in Heng Kun Hao now. He is head of markets strategy, global economics and markets research at UOB. So, Kun Hao, we're all just really trying to make sense of this. So the Supreme Court striking down. But then the president has now talked about 15% tariff under Section 122. Based on what information we have so far, are you able to assess what the global economic impact might be, bearing in mind that the 15% is limited to 150 days, and what could we see in the immediate aftermath, of this development?
Morning, Liz. So the thing is this, we need to understand that what the Supreme Court struck down was what you call the reciprocal tariffs under the EPA, emergency action by the president. So what the White House has done now, or President Trump has done now, is to pivot away to a whole bunch of what we call patchwork measures that they can impose tariffs in other ways. So for example, as you said, the new 15%, what he calls worldwide tariffs, applicable for 150 days under Section 122. Now, there are other measures from Section, for example, 232 that we're very familiar with, the sectoral tariffs. And there's also new measures potentially from Section 301 from unfair trade practices. So the long and short of it is the next 150 days, there'll be much more uncertainty as to how tariffs are stacked up, how they apply, do the existing trade deals still apply. I mean, we hear, of course, that EU is starting to say that maybe they won't rectify the trade deal. So we got to live with the uncertainty in the weeks and months ahead.
I mean, there are two ways of looking at the 150, right? With the 150 days, it could end after that or not. And so what are you expecting to see during this 150 days? I mean, can we expect a lot of front loading? And then what does this mean for GDP volatility as well? As we saw in the Q4 U.S. Growth figures, we show a bit of a slowdown there in the U.S. economy. So, how does this all play into what we can expect from growth in the U.S. up ahead?
Indeed. So it cuts both ways, right? For countries which have had trade deals with the U.S., for example, India, South Korea, there will be a bit more, how should I say, resistance domestically about, how to proceed with the trade deal naturally. For example, for Singapore, DPM Gan Kim Yong has said that this will be very uncertain for Singapore. If we do apply the 15% flat to our exports fully to the US, that's clearly higher than the existing 10% that has various exemptions, right? So again, it remains to be seen how it is. But I guess on a broader note, we are all prepared for this eventuality, this uncertainty, and that, particularly the Asian and ASEAN economies are starting the year on a very strong note. Strong exports, strong trade because the AI and semiconductor sector growth. So that will buffer against a little bit of this uncertainty.
Okay. I want to know what this means for the Fed, because I think previously the Fed had estimated tariffs contributed roughly half a percentage point to price pressures. I mean, how materially do these developments affect what the Fed could do next? And also there is this possibility of a tariff refund, which some estimates put it as high as $175 billion.
Yes. So the estimate is about 170 over billion has been collected so far, but there will be a whole very, very long-term process of legal loops to clear before the refunds will be given, and some estimates that it will be years away. For now, that's the least of concern. For the Fed, the big uncertainty is still Kevin Walsh when he comes on board. A lot may change in terms of the growth, unemployment, inflation dynamics come June when he takes over. But the big thing is in terms of inflation or in terms of fiscal outlook. This will be negative for U.S. fiscal outlook because it will delay the process of collection of tariffs for the U.S. Treasury. And of course, this may make long-term yield a little bit more stickier, yield curve a little bit more, steeper. And of course, this is negative for the dollar as well.
Right. And definitely, Kun Hao, we have lots to talk about this. But that's all the time we have for today. Thank you for coming in. Heng Kun Hao, the head of market strategy, global economics and markets research at UOB.